Hey everybody, how you doing? This is Jason Mancuso with Keller Williams Realty and the Anthony Butera Team. I am joined today by Derek Schlueter, also of the Anthony Butera Team. How's it going, Derek?
Good. How you doing, Jason?
Good, good, good. So we don't have an official name for this yet, but we're going to start a series with our great agents as the experts in this market to get some advice out there, in this format and get people to hear what we have to say. I mean, you guys are the experts in the field and out there every day, and there's a lot going on in the market right now, so it's important to have advice, ideas, just more the better, right?
Yep. Yep.
So we're going to talk about investment properties today. That's one of Derek's many expert level things that he handles in the real estate business. Derek, anything you want to open with in terms of what's going on in the investment property market, locally or what have you? I mean, let me ask you this. So you hear about all this stuff with, you can't do evictions and the rhetoric around that. And there's a lot of people that are hurting from that, landlords, and certainly there's tenants that are in a bad spot due to COVID as well. You gonna tell me right now that it's still good to buy investment properties with that said?
Yeah. With the eviction moratorium coming up, there's actually, I look at it as an opportunity. You go into other markets like Buffalo, where a single family investment property you can't get for under $100,000. And you come to Rochester and you can get, a decent cash flowing property between $40,000 and $60,000.
For a single family, right?
Right. And to me, that's an opportunity. That's why a lot of the investors from New York City and California, I work a lot with them. We could buy a 4-family in Rochester for 120, 150,000 versus you can't buy a parking spot for that in New York City. So even if they have to wait a few months for the cash flow, it's still an opportunity, and it still is enough that we're doing enough with the real estate business for investment properties, even with the moratorium on evictions.
Yeah, I mean, the way things have shaken out in the last year, due to COVID and everything around that, if it's April right now, if you would have talked to us a year ago, we probably would have, had more of a sky is falling, mentality, especially in the investment property market, right? Just like,
right.
Okay, you can't evict, you can't collect rent if tenants don't want to pay, bottom's going to fall out, right? And you tell me, but my opinion is we see both sides of it. We see sellers and investment property owners that essentially need to get out of a bad situation due to tenant delinquency, and they can't pay their bills. And we want to help whatever the goals are to accomplish, right? But that can create opportunities for the right buyers that are okay with kind of inheriting that situation, right? Is that kind of, what's happening across the board, or just kind of a mix of everything?
I think it's kind of a mix of everything. You'll see people listing properties where, tenant has not paid, you're responsible for getting rid of them, and it'll be at a discounted price. And somebody that can, sustain not having cash flow for a few months, that's a great opportunity. Sure. And there's others tenants that, I've been here for 12 years and I haven't missed any payments. So, you still need to do your due diligence when buying stuff and find out where the tenants are at. But yeah, there's always opportunities,
Opportunities, but I'm hearing that there's also just stable, assets or investments that are also offered in the market, and those are going for, fair market value in this crazy market that we're in, right?
Yep.
So yeah, I mean, I think it kind of goes both ways, right?
Yeah, you just have to be creative and use the opportunities to your advantage. There's those people that are looking for those cash flowing properties that have tenants that are paying, and then there's those buyers that are looking for a possible deal and going 2 months without sustaining any cash flow, but in long term securing a great property.
Yeah. You mentioned our neighbors to the west in the Buffalo market, and I think that's worth diving into a little bit here to comment further. I mean, it's something that frankly I didn't realize till recently. Like, we get caught up in the market here locally where everything seems to be on fire, right? And
Right.
this crazy seller's market and prices going up, etc. Um, Buffalo is like, big brother that's really even, at bigger levels, this growth that we're talking about, right? Carried over to Buffalo is like even exploded even more. And it's tough to get the same numbers that we could in Rochester now, right? In terms of return on the investment.
Right. Yeah, it's kind of nuts there. I have somebody that's moving here from Buffalo that I'm helping find a home, and they've filled me in on how the market is there, and it's and people think it's bad here. It's very competitive in Buffalo too. And that goes even with the investment properties, even with the eviction moratorium and things like that. They have single family investment properties that are going for 110, 105,000, versus
Yeah.
the Rochester area where we're in the 50s and 60s.
Yeah.
Um,
And similar neighborhoods, right? Like not taking
yes.
a better or an increased quality of neighborhood compared to something in Rochester. Like if you had a grading scale, you take a B neighborhood in Rochester and a B neighborhood in Buffalo, and you're looking. It sounds like there's examples where it's almost like double the price, right?
Yes. Yes. That's the
So
case.
that
Yep.
therefore you're going to make less money ultimately,
Yes.
right?
Yes.
So, yeah. I mean, not to give a sales pitch for the Rochester market, but for those that are investing just in Western New York, that area, right? This land
Yeah.
mass that we have, whether it's Syracuse, Rochester, Buffalo, or just Rochester and Buffalo, you know, depends on the criteria. There may, maybe Rochester doesn't have as much upside as Buffalo. We don't
Right.
have the professional sports teams, right? That sort of thing. We don't, have as much, downtown development and etc. But still stability in this market for less and you make more money. It's almost like why
Yeah.
not, right?
Yeah. There's a reason why some of the people, that I work with live in San Jose, San Francisco, New Jersey. There's a reason they're investing in Rochester, and it's affordable and pretty good cash return.
Well, elaborate on that a little bit. Let's pretend I'm somebody that you're talking to and not familiar with the market. Why? What would you tell me about like why is it worth me to spend my hard-earned money, take risk and invest it somewhere that I've never been, or even if you live here locally, getting into the investment game. What would your I hate to say sales pitch, but like what would you present as value to somebody in terms of why somebody should do that?
Value, I would just, ask them, so where you currently live, what would an investment property in that market cost? This is for out of town investors. Um, what are you looking for as far as return? One of the other things, this may sound kind of cheesy, but you look at all the multi-billionaires and millionaires, and probably 90% of them own real estate. And that's how they got started investing in real estate. Um, and it's a good cash flowing business. And down the line, if the market continues the way it does in Rochester, there's going to be tremendous upside for you. um Mike,
Yeah.
Rochester is like a microcosm of the market. um we don't see the hits like the big markets do, like LA, New York City. We'll just see a little blip and it'll continue on. And that's huge.
Sure.
That's huge.
Yeah. Stability, right?
Yep. Stability.
Yeah, it's huge. I mean, so I just heard like a little bit of like, financial advisor talk, right? Like I mean, this is a role that we play in a way where we're not, financial advisors. Like technically we can't necessarily give you financial advice in terms of how to handle your investments, but there's this element of like, diversify your portfolio. If you're all in on the stock market, that may not be a good thing. It's good to, kind of finance 101. It's kind of good to have not all your eggs in one basket. So that's why a lot of, most of the, extremely wealthy people out there have real estate as investments to go along with everything else. And we're not telling you to put all your eggs in a real estate basket either, right? It's good to kind of have it spread out and diversify.
Yeah, a lot of clients I work with, they do diversify. They have stuff in stocks, metals, and real estate.
Yeah, yeah, very cool, very cool. Well, cool. Anything else you want to add?
No, just plugging away here and getting ready to list some investment properties. So
Good.
Yep.
Well, stay tuned out there. And Derek Schlueter with the Anthony Butera team, and I'm Jason Mancuso. And again, thanks for tuning in. And Derek, appreciate your advice here. We'll do it
all right,
again soon.
thanks, Jason. Have a great day.
You got it.
All right, bye bye.